We divide trades into A, B, and C according to the probability that we see of a target being reached. Of course, the strongest and highest probability will be an A trade, and in the following video I'll give you an illustration with what I call a quick drill by just compressing a chart to get a feeling for what the overall picture is, and you'll see why this dollar Canada trade is considered an A trade. This is dollar Canada chart, August 21st, 2023, and I want to ask you a question, which is, you got a directional indicator over here. We had a nice move to the downside. Is this an A or a B trade? Now we bounce off the low here. Had a nice spike down, indicating some stops are probably run. We got a directional indicator here, where the buy would have been at the opening of this candle. Is this an A or a B trade? Well, let's give a look at what I call a quick drill, and we'll see what you think, and I'll tell you what I think, and I'll tell you what actually happened. So now I go to a quick drill where I drill up and see what the overall picture looks like in dollar Canada. I'm going to keep drilling here as far as I can, and what do you notice? Over the past really almost 2 weeks here, we've been going straight up. We have all these blue amazing trader lines dominating. We finally got a couple down here, but this is really a correction and should be treated as such. And if you look at an AT line, you would have seen another line across here in some of those charts. But the point is, just scanning this tells you that this move down is a correction. Therefore, this would be a B trade. The move up would be an A trade because it comes off of a correction with a directional indicator that meets our criteria and in fact gave an alert. So the answer to the question is, this is the B trade, this was an A trade. So when you got an alert here, and you did a little drilling, do a quick drill that is, you would have recognized that what we have here is just a correction down. And unless it took out, let's take a look at it, hold on. This line over here, which I have on a 1 hour chart, the move down and the alert that was given gave an opportunity to trade by treating it as an A trade, which had a higher probability of working out, and therefore one of the alerts that you would have taken and put on as a trade. So here is the results for that dollar Canada A trade alert. It was long over here, stop below low of the day here. We should take profit based on a 1.15 to 1 risk reward, and the profit was easily hit. And this is just the results of the A trade, as I showed you. Why it was an A trade as opposed to the one that was a sell, which was a correction, was treated as a B trade, and in fact in this case did not get an alert.